Yes, it was a good year for the trust, despite a sort of bit of a wobble around sort of the Brexit referendum result, where our combination of concentration on 250 mid-cap stocks in the UK and lack of gilts did cause a little bit of turbulence at that time for us. By the end of the year, a lot of our mid-cap companies had recovered very nicely after a sell-off post-Brexit, and the overall return for the year was ended up being 19.6% on a net asset value basis and over 20% on a share price basis. So what was particularly pleasing, I think, over that period was that returns came from a very wide range of the assets that we invest in. So already the UK equity portfolio gave a very satisfactory 18.5% return. Overseas equities were the star performer, but they were very much sort of benefiting from the weakness in sterling over the period, and they gave a sort of 25% return. But we also had very good returns from our fixed income portfolio, where we're underweight, but the positions that we have performed very well in very specialist areas. And the specialist assets also performed well, giving a return of 15%. So that was particularly, I think, satisfying that the contributions to the overall return came from a very wide range of assets. In terms of the dividend front for the trust, we increased the dividend by 3.5%. That was ahead of inflation, which is our remit to grow dividends ahead of inflation over the medium to longer term. And all of the sort of returns that were achieved were done with a much lower level of volatility than the pure equity market, something like 20% lower volatility. So all in all, it was actually a good year for the trust.